Hello, everyone. I hope you can hear me. It says I was muted before, but hopefully you can hear me now. We are live. It is Monday. It's the 23rd of June. Welcome to the second half of the year, you would argue, after the summer solstice or the winter solstice, wherever you are in the world. Summer solstice here in the Northern Hemisphere. It was a beautiful weekend, very hot here in London. Obviously, the political situation, the geopolitical situation continues to heat up as well. Unprecedented moves by the United States to actually attack three nuclear facilities in Iran directly. That's it. We're finished. Is sort of the tone that's coming out of Washington, but Tehran needs to get to the negotiating table. Is President Trump's line on all of this? Obviously, the Israelis want. Well, certainly Netanyahu wants the regime change, and they're continuing to strike, and they've hit the sites that the US hit over the weekend with their own missiles this morning. Apparently, Iran promising, or the regime promising vengeance on the Americans and their supporters wherever they are. Obviously, the whole region is on tender hooks. But as far as the markets are concerned, there's been quite a muted response. If I'll come back to the calendar in a minute, we're looking for PMI data today. We'll come back to that in a minute. But as you can see, the main expected move would really be in the gold market to the upside. And look at today. Thursday and Friday, we went into the 20-day moving average. We touched the 20-day moving average again today. This is the daily time frame. But if we go up to the hourly chart, you can see obviously a bit of a spike as we opened last night to 33.96. I think was the high. 33.96 was the high. And then this morning by European Open, we were testing lows under the 33.50 area. So we're currently at 33.75 or 73. So really somewhat muted response from the markets as far as what's going on. Obviously, perhaps expecting that this is a one-off by the Americans. Will Iran really close the Straits of Hormuz? 20% of global oil supplies go through the Strait of Hormuz. If we look at energies, US oil 75.40, so again down, spike on open, as you might have expected. Some big spreads on open, guys. I don't know how you were caught. I had 8 open positions on. Oh, can you hear me? I hope you can all hear me. 8 open positions on the audio. Let's check this is working. Mary had a little yeah, there we go. On a Friday's night, obviously a big surprise from the Americans, Trump's decision. But we are more or less in the money so far today. We've hit target on a few. Check the Discord group for details on that. But we are sort of on the money, as I say, on that one. So oil spiked to 78 again through this high of the from the 13th when Israel hit Iran for the first time, and we're back to the key 75 level. So as far as certainly this derivative oil price is concerned, $75 continues to be a key pivot area. It's a hugely psychological number for WTI West Texas Intermediary, $75. Obviously, Trump wants a much cheaper price than that, but we've been rallying for a while, and $75 in the current elevated situation doesn't seem too spooked to me, to be honest. Brent at $77. Let's go quick Brent for the sake of completeness. Went to $78, $79, sorry, this morning. And we're back to, I say, 77 on UK oil or UK oil or Brent, the most widely quoted oil price, $77 currently, and again remaining bid on the higher time frame as we have been for a few weeks now over that 20-day moving average. First break here was back on at the beginning of June. And we've rallied ever since. Here we are, 23rd of June, and rally continues. Crypto has been quite a hit quite badly. 100,000 was tested over the weekend, and here yesterday we actually went under it at some point. If I bring this down to the hourly chart, obviously much reduced volumes, but here yesterday afternoon under 100,000 before we got a spike on open Again, a bit of a relief pitch. But again, here on the 1 hour time frame, we remain capped by the 50-hour moving average today, and testing back down to the 20-hour moving average. So it remains weak in the shorter time frames. The hourly, the 4 hourly continues to move down as that trend line. Remember, we drew those trend lines on Friday or Thursday, I think it was, on the daily time frame, and we continue to fit that that pattern. So there we are. There's that down channel. Here's our current down channel into 100,000 buyers there clearly, but the trend remains to the downside. So here on the daily time frame, the big spook here on the 17th has kept us under the 20-day moving average, and now the 20 over the weekend. The 20-day or the 21 EMA, as this red line is now crossed from above to below the 50-day moving average. So technically, that's a weak position. Obviously, here you can see a positive position. We've crossed the 20s, crossed from below to above the 50 here back in end of April, 21st of April, when we rallied all the way to that 111,000, that new all-time high. Here we've crossed with assets, with revenues moving out of the more risky assets, and there's not much more risky asset than Bitcoin or crypto, and so the 100,000 has been tested. So a breach of this 100,000 will bring us back to these numbers we've talked about many times before, the 92,000, the 96,000 level. And remember, it was only here at the beginning of April when we were down to this 75,000 level. So trade it as you see it, trade it as your platform indicators, your setup is seeing it. But if you're a long-term holder of Bitcoin, obviously that's a different position. But from a trading point of view, this is now short and has been technically here since the 17th of June. And added to here on the 20th of June on on Friday, when we breached and closed below the 50, broke and breached the 50-day moving average here on Friday, and we've been down all weekend into the key 100,000. Obviously, some targets around that area, some buyers set it around the 100,000 level, and we bounced a wee bit this morning, 101,500 at the moment for Bitcoin. Let's just go back to the main calendar of the day. For some reason, I've got the FOMC, the Forex Factory one on, but 6 and 2 3s, isn't it? We'll come back to that one in a minute. This morning, it's been a bit of a mixed bag out of Europe for PMIs. Remember, PMIs, Purchasing Managers Index. We count the manufacturing sector and the services sector. The services sector much more important as far as the economies of industrialized and mid-market countries, middle income countries. But here, France, we had a bit of a miss on both paris. Here, Germany, bigger economy, bit of a beat. 49 and 49.4 for the more important services. It's the first reading. That's moves the markets the most. Quite a significant lift for services from 47.1 to 49.4 for Germany. So that's a really quite a positive tick in the box. Love to see this one back over the 50 for the expectations for the manufacturing sector in Germany and the wider Europe session. We'll look at the chart in a minute. It's grinding along. It's been all the way down at 34, 32 manufacturing in Germany PMI data. But when we bring all that together, the other European countries, Spain and Italy, and the other economies of the EU, we had a bit of a miss, actually. In line with last month, 49.9 compared to 49.9 and 50.2, just into expansion for the services area. Still very weak for the composite number. Services just on 50, composite just at 50.2. Was expected to tick up a wee bit. Both the manufacturing and the composite didn't quite do that, so they were red. We've missed a wee bit overall. Better news across the English Channel in the United Kingdom. Composite from the came in at 50.7 from 50.3. Manufacturing remains weak, like everywhere in the world, really, but it was better than expected at 47.7 from 46.4 last time. And the services continues to hang on above the 50 level at 51.3, but it's quite a lift from an expected 50. Well, it's not really, is it? 51.3 from 50.9 last time. That was upgraded, I think, if I looked at the Forex Factory. Yeah, these are all upgraded as well in the UK. So this is 46.4 from 45.1 for the manufacturing, and services last time was upgraded to 49.7 from 48.9, and so that 50 breach here for the services number. Sorry, this is in Europe is better, and this one here for the UK is better as well. If we just go, just drill down in the key one everybody's watching is this Germany one, really, to move into expansion. We look at the oh, there isn't a chart. I thought it was a little calendar. There is not. Sorry, I thought there was. There's not. I thought it was a little chart for German manufacturing. But as you can see, generally it's coming better than expected. We're waiting in a couple of minutes for the key US data to drop here. PMI is composite, and we've got some home sales, new home sales later on. Big warnings for a big heat wave hitting the eastern board, so that might have impact on attendance and performances for the next week or so in New York and Philadelphia and some of the other big cities of the Northeast. So watch that as we go forward. So PMIs out of the US is what we're looking for at the moment. Again, better than we see in Europe at 52.9 and 51.1 for manufacturing. Again, another one's just crawled into the expansion zone. Manufacturing, again, hugely symbolic for the current administration. Let's see what that data looks like at the moment. So there we go. Obviously, all eyes remain on what on the news flow, basically, what Iran will do, how it will respond. Will it hit sort of US bases in the Gulf? US personnel in the Gulf. I mean, all options are off the table according to Tehran, and obviously Israel continues to attack. Trump's got pushed, or whatever happened. Who knows what really happened? Whether he'd made his mind up a while ago, or whether he did genuinely. There's an interesting article in the New York Times this morning. Obviously, not the greatest fan of President Trump, but interestingly saying, he'd been watching Fox News flow, obviously quite a right-wing news flow, sort of bigging up what Israel had done and supporting that the president should get involved more. So yeah, who will see where this goes? But obviously, civilian lives are lost in these when countries go to war. America's saying it's obviously not at war; it's had a strategic hit. They're arguing against Iran. Israel are talking about being at war with all their proxies from down in the Houthis down in Yemen to Hezbollah in Lebanon. Sorry, in Yemen, in Lebanon. Obviously, Hamas conflict continues in Gaza and the Golan Heights, the incursions there, and obviously, more importantly, at the moment, top of the shop is the Iranian direct conflict, direct exchange of missiles. So it's a worrying state for the Middle East and obviously the wider world. So see how it all pans out. But I say, as far as markets are concerned, markets are a bit of a muted response. Apart from obviously we've seen quite a significant move down in Bitcoin. We've seen a relatively significant move in energies, in oil in particular, but not as much as perhaps we might have anticipated. Again, down in this current hour or current day today. There you can see we're down today on that daily time frame. But again, obviously we've had a significant rally this month so far for oil. Gold remains rather muted as well, I would argue. The data's just come across the candle. Sorry, let's have a look. So, manufacturing, that's a really nice number for the president. It says last time was upgraded to 52 last month from, it's not showing me for some reason, 52.2. Actually, it's been downgraded a tad, but better than expected at 52.0. And services also better than expected. And last month was actually upgraded to 53.7. So that's continuing. Well, that's another positive tick for the president. It adds weight to pushing back, or adds perhaps to the idea that the Fed could actually cut. So this idea that 2 cuts are still on the table. Many are poo-pooing that. But that's a positive tick for the US economy is still doing okay. Last month was upgraded. This is the first reading of services PMIs coming out in June. Get an upgrade next month, but 53.1 by far the best numbers, and you see here across Europe and Australia reported earlier on in the day. So 53.1 for US PMIs, service PMIs, and 50.0 for the manufacturing handle. Exactly what we got last month, because last month got downgraded, but 0.9 of 1% better than expectations, and services was 0.2 better than the 52.9 that was expected. But from a proportionality on the US economy, obviously services has a much bigger hit. See what services, existing home sales, these are the second-hand home sales. When I say existing home sales, see if they're back over 4 million for the previous month when that comes out in 10 minutes. So let's have a quick check at the charts, what's happening elsewhere. So we go to the majors. Euro, biggest of them all, 114.88. So we're back under 115. We were long this position. Let's just show you my. Hopefully you can see it there. Just drill down to the hourly chart. We were long this from Friday's close. Where were we? We got here. We were entered here. This is our entry. Out of the money on open, and we closed it out. It was my more aggressive strategy. So we closed it out. Tried to close as it got back to. I was looking at it here. It's now on the 7 o'clock candle. We got out about 15.07, I think it was. It was 15 points. Yeah, 14 points. That's right. It was. I got out at 15.07. I haven't got in at 15.21. 7 times table was one of my favorite times tables as a kid. So I'm really drilled in the 7 times table. So 15.07 we got out. That was a minus 14 position. Obviously, it's deteriorated since then. Here we just drill down to the 5-minute time frame. The data came out here, and the snap up, we'd had a little snap up in for the last 10 minutes in euro. The data in my view should benefit the dollar. It doesn't look like it is immediate. It hasn't actually done anything. It's moved up. Also, sorry that it's weakened in the last 10 minutes ahead of the data, marginally. But say for the day, the dollar still got the upper hand. So we went to lows we saw here on Thursday, around about where our stop losses are here from Friday, 114.43. So 114.40 has been our low. Today, 114.50 really has been our low, wasn't it? Yeah, 114.50. Doesn't want to get tested today, so another round number in play. But we are under the 115 level. Just go back to the daily time frame. A colleague was asking me about what's my long-term view of the euro dollar, and I had a look at some of the weekly and the monthly charts. This remains bid for me. There's a sign of a bit of weakness on Thursday and Friday, but there's the key 20-day moving average at 114.45. We come into that zone on Thursday. We've come into that zone again today. The 50-day, more importantly, is all the way down there at 113.62. So this remains relatively positive. We have you can see there's clear signs of a rollover there. If you want to put your little trend line on there for the short-term move over and see if this rollover is going to continue, you could either put that through there, or if you want to be a bit more conservative, through the highs of the day. But obviously that's depending on your particular platform when you're doing that sort of thing, guys. Remember, so that one you could have a bit of a fan there, the first two from the top. So you'd want to break back through these two trend lines if this is going to go back up. If we remain below this one in particular, you can see this second one here, through the bodies of Friday's and so far today's candles, a breach of the 20-day moving average, and that would add to bias to that position. There's a key 61.8 fib level there. That's from the this leg down here that we saw, this high from hang on a minute, what's that? That's the wrong way around. Oh no, sorry, this is sorry, yeah. Sorry, from the low here on at the beginning of the year. This is January the 15th, when we were all the way down here at 102. Remember that? Remember 102? All the way down there. That's the major fib level from 102 to 1016. If indeed 1016 is being that high level, and the first level on there, the 38, is all the way down there at 112.80. Sorry, that's a major leg, that one. This one is this shorter leg up here. So this last leg, so from this May the 12th low, which was the 112.25 area. 112.25 was the low here on the 12th and the 13th of May, to the high at 116. The first or the key fib level, the 61.8 level, comes in here below, equidistant between the 20 and the 50-day moving averages here at 114.13. So there's your three key support levels going into this final week of June. There, see that for the euro. So where we are, where it's 114.45, the 61.8 fib of the last up leg here, the retrace to is that drawn the wrong way around? 60. No, that's okay. No, that is drawn the wrong way around, isn't it? That's not correct, because that's got the wrong levels on. But that would be the 38 anyway. So anyway, you see that still is in play, and then the 50-day is also in play there at 113.60. So chat who wants to join me. So there's our key support levels for the euro. If this down leg is going to continue. Personally, I think that we are still biased to the upside. The euro on the daily remains biased to the upside. If we look at the weekly, you could argue that's rolled over significantly last week with a massive amount of volume or volatility on there. Obviously, we can't read anything into this current candle here. It's just starting, but that could have suggested here on the weekly that we were at a pivot high turning point at 116. See how this week pans out, but we've had arguments about that before. Here went down for 4 weeks, here less so, as a weaker tail here, but we continued up for 2 weeks. So just question that. Bit of a doji candle here last week, but we've had that previously, and then it's continued up. Obviously that was that first test into the 116 area, and it's taken 1, 2, 3, 4, 5, 6, 7, 8 8 or 9 weeks before we've come back to that level. So yeah, trend remains to the upside here on the weekly as well. There's the 5, the 9, and the 21 moving averages, and the 50 period moving average on the weekly is below, all the way down there below the 109 level, which is a key support area. Before that, obviously 111 and 110. We talked about that in the weekly data. I won't go up to the monthly because I know a lot of you are not trading those sort of levels, but the monthly remains positive also. So anyway, today euro obviously got a bit of a hit from the bid on the dollar to start off with. It came back mid-morning, got back to our entry from Friday. We were out for 14 pips negatively, and it's gone back down to test the low of the day, and we've bounced back up since then at 114.92. So volatility remains in play, but on the higher time frames, euro dollar remains somewhat bid. Aussie 64 from 65 on Friday. Big decline here, as you'd expect. Aussie vulnerable to higher oil prices. Similarly, yen 147 from the 145 level on Friday. Yen weakening on oil price, and same with the Kiwi. Kiwi's back to 59 from the 60 level we were talking about on Friday as well. So those Antipodean and Asian currencies being hit by the dollar getting a lift. Swissy has remained the best performer, sort of cancelled each other out today, the Swissy and the dollar. And we still trade at 81.70, again sideways action, but the higher time frame remains Swissy with the upper hand. The rally in the dollar is stalling, as we talked about on Friday, so we really need to break this 81.95 or the 8.82 level significantly for this downtrend to be finally over. But we could easily, as I said on Friday, return to the 80.5 level, this intraday lows we got here on the 13th of June and the 21st of April. Could also argue that's a bit of a double bottom, so we may be looking to move up, but there's no real sign of that just yet. Dollar up against the Swiss franc. Sterling's the other one we haven't done. 135 was or 136 last week, a bit like 116 for the euro. Perhaps a step too far, a bit more of a steeper decline in the euro. here for sterling against the perhaps returning dollar, perhaps getting some safe haven bid. Who knows what's happening? But everything, whatever the reason is, the truth is the price. It's always in the price, isn't it? And at the moment, we are under the 20-day moving average. That would have gone short there earlier last week. And it remained short into the 50-day moving average this morning at the key 134. So some profit taken off the table on that short sterling move. Not a lot in it, to be honest, but still short. If this holds, again, a lot of fresh air below here, but it is a key pivot area. You can see 134 here and here and previously. But the next leg below that takes us to 132, so 200 points below there. There was a bit of a support here at 132.50, but certainly 132 is the next level below. If this break of the 50-day moving average happens, obviously it didn't happen last time, and we rallied quite significantly, provided resistance, but only for a few days. Now broke through it, and off we go. 20 crossing the 50 added to it, and off we've gone. That big leg up there. So down for now, but it's a retrace of a lot higher time frame trend, I would argue. 134 looks like it would hold. 134.50, maybe the downside target for sterling bears currently. But yeah, see if the turn in the oversoldness of the dollar continues to hold its bid. Crypto we've done, energy, oil we've done. We'll come back to the crosses and our own positions. Indices, as you would expect, this morning a bit freaked out, but here you can see on the daily time frame we're actually up. We were up Friday and we're up again today. So the Dow went in and under the 42,000 level on Thursday, and we're back up this morning. If we look at the movement though, obviously we opened lower last night, under the 42,000 level. It was literally for the first hour, and then that was triggering long this morning as I came in to have a look at this. I haven't traded this, but intraday that was looking to go long. Probably would have added here at 9 o'clock. Probably may have been stopped out if I'd had my stop loss at the 50 there, but we're up now into the cash open 42.33, and interestingly, this is the high of the day now that the cash market is open. Remember, the cash market opened about half an hour ago. That was relatively positive PMIs for stocks, so we're up, and 42.450, our entry from the 23rd, pretty old entry, but you can see that high from Friday certainly being tested, I would argue, today. 42,400 could be your upside target for Dow initially today. It's running up quite nicely at the moment. DAX has obviously been open all day, and it's subject to oil prices that affect Germany more than many other European counterparts. So from a relatively positive Friday, we closed down, but again we're back and we have a green candle on the daily time frame for the for the DAX today, but we are down under the 20-day moving average, and our 50-day is providing our support. So this is a weak recovery from a short there on the 12th of June for the DAX, and that's continuing to unwind from these new all-time highs, 24,500 zone earlier in the month. Final trading week of the month, obviously, this week. So and lower volumes as we go into July. So I'll be watching that 50-day moving average for the DAX, any other positions as we move forward. The Nikkei, 33,500. Obviously, the first major indices following Australia to open this morning. And again, you see a positive day, down on Thursday, down on Friday from this target area we'd had from earlier in the month, the 38,500, 600 sort of level. But again, daily hourly candles, big negative open, all the way down to 37,950. And we are now rallying a bit like there you go. The 8 o'clock candle would have taken you long here on the Nikkei this morning, and that's still long. I haven't gone into a level, what was a target level from the 9th of June again. Hit it, come back down again. So anyway, Nikkei remains bid to the upside. Nasdaq cash market open. Obviously, the Nikkei's closed now. Similar pattern to the Nasdaq and the Dow. Big opening candle, negative opening candle, new lows for quite a long time actually. If we drill this, actually go to the 4 hour. See this opening candleless entry here from the 27th of the 5th takes us all the way back to indeed the 27th to the 2nd of June. So it's a relatively not a new low for the month, but it was quite an opening salvo. What you can see there, very strong recovery along there on that last 4 hour candle on this chart, but capped again as we have been here by the 50 period, but tentative long into the 50 period. Can we break up? Can we get back to that 22,000 level and new all-time highs? For the Nasdaq, it's looking okay based on that. Obviously, next moves by anybody could obviously upset the risk value. Lots of Fed talk this week. S&P 500 finally. The most important, very obviously, as you might expect, a very, very similar pattern there. Again, another one was long there on the 7 o'clock candle in the 4 hour, and that's actually over its 50 period on the 4 hour. So 6,000 trying to be recovered again here on the derivatives chart. So the S&P 500, our SPX 500. So on the back of that fairly decent PMI data. So Monday, perhaps not as shocking. Certainly when I was waking up this morning, checking my Reuters feeds, the news coming in overnight wasn't as bad. Oil had spiked, but it was up 2%, and then it's up a bit 1% in Europe in the close of Asian trading, and obviously remained bid, and the sort of stock markets in Europe are all down a tad, but not much overall. Sort of teeking to the upside. Nikkei's closed. The cash Nikkei is closed down. The Kopsi in South Korea has also closed down. Hang Seng is up 0.67 of 1% for Monday's trading earlier on today. So again, US data leading the pack, certainly compared to its European and Asian competitors. Lots and lots of speak from central bankers this week. So Ms. Lagarde, this hasn't updated, has it? It's an old calendar. Why is it not updated? How weird. It's up and down. I must have closed. I must have had an old one open, and let me just update that. I'll come back to it. Anyway, as I say, yeah, lots of Fed speak, lots of central bank speak again this week. The key event is the testimony from Chair Powell tomorrow, Tuesday and Wednesday, the 25th, to Congress. Is bi-yearly, semi-annual, as they call it, monetary policy report before the House Federal Services Committee. Some very aggressive Republicans on there, fairly understandably. Powell, obviously tries not to get dragged into political shenanigans, but he's got to play his part in that. Actually, what's the that hasn't updated, so why isn't the existing home sales? There we are, back over 4 million. That doesn't surprise. So more positive data from the US. So PMIs are positive. Existing home sales surprised by an extra 400,000 extra. Sorry, 40,000 extra. What am I talking about? Extra new homes. Existing homes sold, and better than last month as well. So some relatively positive data out of the US to kick off this final week of June. So as I say, it's lots of chatter. We got inflation from Canada tomorrow. Mr. Bailey, head of the Bank of England, he's got quite a split MPC in the UK about to cut further or not to cut further, and we had that 6-3 split. I say Chair Powell is by far the most important testimony this week, or central bank will hear from this week. Tuesday tends to be more important than Wednesday, first day rather than the second day, but just don't hold that as actual gospel. We also got consumer confidence. Remember, it's holding up remarkably strongly tomorrow. We'll be live for that, and as Chair Powell starts to speak as well, see how that goes. Richmond Manufacturing Index. Remember, we had the Empire State last Monday was much worse than expected. Philly Fed wasn't as bad. See what Richmond comes in with on Tuesday. New home sales on Wednesday, and then pending home sales data on Thursday. Well, so it's end of the month. The other key event on Thursday is, as Harura was saying, we've got well, GDP here is at high impact, but really is backward looking. So it's not the market moving event it used to be years ago. But durable goods, key. These goods that hang around, computers, hard drives, all that sort of stuff, front loaded ahead of the tariffs. See how what's that's looking like on Thursday. So Thursday, a key day. And then for me, some of the one of the events of the month, the core PCE price index on Friday. Again, we'll be live for that on Friday. Is inflation continuing to show signs of softening? It looks like that is the way. But see what we look like there. So and GDP again backward looking out of Canada also on Friday. So fairly busy week. Look for what Powell has to say. Obviously, keep your eyes open, and we'll keep you updated here at theproptrade.com about any moves out of Washington. Obviously, you've got your own news feeds as well, so bear that in mind. And in times like this, it's even more important to have a strategy, trade your strategy, accept your losers, bag your winners, and try and keep your head above water. As I said, I had 8 open positions on Friday. Obviously, not knowing what Trump was going to do. My system triggered, so we triggered it. Remember, I had that big losing week last week, the first big losing week since the biggest losing week for a long time for me. And only the second losing week of the year. We're still up for June. We were up still 100 and odd points for June, but yeah, 491 points. That was a big surprise. But anyway, these things happen. It was going long against the Aussie just ahead of the uncertainty. That's done. We've learned from it. We always learn from it. We move on. And then this morning we had 8 open positions. Those are the 6 new ones on Friday night. And we still had a half a position on the Euro Kiwi Open and a full position on Aussie Yen. So there was 8 bits of risk on the market, all contained. Obviously, if they all lost, we had to lose quite a few percent. But we've had some good winners this morning. 5 of them are still open. So pound yen is still open a half. We've had a 40 pip move on that, 44 pip move on CAD. Pound CAD, a 30 pip move on Swissy yen. These are, those 2 are open. You can see here CAD yen's closed because it was that's right. We moved the stop loss up and it's reversed back to the stop loss on there. Euro Oz still half open. Stop loss now up at 179.29. The euros, as I was describing earlier, we got in there at 115.21. We got out at 15.07 this morning for 14 loss. Pound against the Kiwi, 50 pip move. We took half of that off the table. We got 25 points in the bag on that, and our stop loss is up at 2.2623. And the Aussie yen, that was a full position from a while ago. I don't know why that didn't close the full position because it had been open for so long, the 18th of June. But anyway, half the position was closed, 15 pips off the table, and the stop loss. Oh, that's been closed. It has been closed. Yeah, stop loss got raised to entry, and it's reversed since then, and we are out. I was surprised it actually hit target, given the they expected, after the impact, you would expect Aussie yen, because Aussie yen is very much a risk sentiment pair of all the ones, but certainly the yen was under pressure because of the spike in the oil price. I think less so the Aussie, but anyway, you've seen the volatility on that. Actually, let me show you what I'm talking about. Demonstrating that it's been all over the cross. If you look at the Aussie yen as an example of the risk factor, so we got long here on the whenever the 18th was. This is this daily? It's 4 hourly. It must be. Is it this candle here? 18th, 17th, 4 o'clock. 8. There we are. That's our long position there. You see it in that candle there at this price here, 94.34. Went against us for a long time. Edged into profit on Friday a wee bit. Then a big move down on Friday. We were out the money again on Friday. So it was out the money. I think I've updated you, didn't I? On Friday's close. We went low initially, so there was a rise, as you might expect for the Aussie yen to go down, but then it spiked round. I mean, we were a bit lucky, obviously, just to get our target hit this morning on that, and then it's come back down again, and we're back to our entry where we were on the 18th of January, but that's completely closed now, so particularly volatile one. But again, as a measure of volatility, if we just come back to the hourly chart on there, you can see the exaggerated moves in the hourly chart, but really go to the daily, it's really the weakness of the yen is still prevailing. So you would have expected yen to have more of a bid in this geopolitical uncertain times, but really it's the attitude of both the government in Japan and the Bank of Japan where we've got this continuing weakness for the yen. So Aussie yen, surprisingly in these geopolitical times, remains rather bid. I wouldn't expect to say that, but the price is king. What the price is telling us is the price is, it's bid, regardless of what sentiment or what has happened in the past and what logic might tell you. This is still long, and the 20-day moving average has held pretty well there in all this volatility. Obviously, been quite volatile, and big spike here on the 13th, but that was all bought back on the 14th, and that's a positive, reaction, candle reaction. So still bid, struggling to get over today where we've been on our high today. Next upside target, obviously our guess is 95 itself. There we are, there's 95, and that tweezer peak top we had here on the 13th and the 14th of May, which took us to 95.50 area for Aussie yen. Anyway, so a lot of those are still open. So some are closed. We're in the money for today. We're in the money for the week at the moment because it's only just started. And we're in the money for June still, even after last week's monumental 563 point loss for the week. But there we go. Let's get over it and let's move on. Plenty of things potentially going on tonight, potentially. At the moment, on my main system, I have a potential. There's only one at the moment, but it's obviously still plenty of hours to go. It's only 3 o'clock. Aussie and the pound. So sterling pound. Oh, that's looking. Yeah, that looks like it's a late one. Mightn't be any legs left in that. I left it. That's long pound Aussie, but I've got a pound. It's a pound Kiwi I've got to open, haven't I? It was a pound Oz last week, wasn't it? So pound Oz on the main system might get another 30 points out of that, but that's looking pretty good. Let me show you that pound Oz. Yeah, that should have triggered really Friday on my other system. I don't think I took that. No, didn't. But anyway, such is life. Pound Oz, that's looking pretty positive tonight, and might have already run out of steam might not take that tonight, but that's the only one that's on the main system. The more aggressive system is looking like Aussie CAD. Let's have a look at that. Aussie CAD. That's a short potential position. Massive stop loss on that. I'll see when that pans out. May not take that one as well. So Aussie CAD potentially short. Another one is CAD yen, also long, a bit like the pound yen. If you look at the CAD yen, it's one below it, isn't it? CAD yen. This is looking like a long. There we go. A long position, gapping up this morning. So weakness in the yen across the board. And pound Swissy is another one. That would be a short, I would guess. Oh, no, yeah, it's short, even though we're up today. But stop loss really tight, so that probably won't get taken. But anyway, I'll update everyone tonight what actually gets taken and the prices I get filled at, and my targets and my stop losses. If you want to follow me, It's all for free. I'm not making any money out of this off you guys, but if not, it's up to you. I'm just showing you it can be done with you can make money in this game with a system, with an edge, with something that works for you and your time frame and your personality. So if you're new to theproptrade.com and you'd like to take a position, click on get to the website. As with all prop trading companies, there's different ways of doing it. So you can either do the express challenge, which is one step. The rules are a bit tighter. We got no consistency rules. We got, we look at not wanting to risk over 3% on any particular trade. You need to make 12% on your investment. Maximum loss is 7%, but you only have to go through one stage before you get to a funded stage, and then 80% of all the profits you make are yours after that. And you obviously get the feedback. The pro level, the other extreme, you can do 1 step or 2 step, but at this level you can get up to 90% of the profit you make on your funded account once you get there. Entry is a bit higher. Here, if you wanted a $25,000 account, it's 195. But if you put in new, I think it's still working. Is this new 25? Is that still applied? Yep, still applies. So if you're a first-time user, you get $50 off that 195, gives you a whopping $25,000 worth of equity for less than $150. That's fantastic investment, really. If you know what you're doing, 90% of the profits you make after you've been through this 2-stage process can be yours, paid every week on a Friday. Say there's no consistency rules, there's no hidden agenda, there's no funny things that are taking you out. We're very open, we're very transparent. We want you to be successful, because if you're successful, you'll tell your friends, and people will come and trade with us, invest with us. So we're here to help you guys. We do this live session every day. There's not much feedback, unfortunately, but please feedback, join our Discord group. And we're here to help. If you are a customer currently, there are codes all the time, new codes coming up. If you're not new, so keep your ears to the ground. But we're as competitive as the next guy, and we do want you to be successful. We've been around the block. We're open, and I'm not sure how many other prop trading companies do this on a daily basis, but we're here to help you, my friends. So see you all tomorrow for the I forgot what I was talking about tomorrow. What's on tomorrow? Tuesday. It's Canadian inflation, and obviously Powell's testimony, and the consumer conference at 3 o'clock as well. So key event, 3 o'clock my time. That's 2 o'clock Universal Standard Time, 12 o'clock Eastern European Time, Eastern Mediterranean European Time. So join me for that tomorrow. Take care, everyone. Stay safe, and as ever, may the pips be with you. All the best, everyone. Bye-bye.